Okay, well, let's get started then. Well, welcome everybody to the Pipnotic Symposium on the 2nd of November 2017. Unbelievable. I can get these people in here. I can see you here, Ceci, but I can't make you a panelist due to, I'm not exactly sure why, but I can see you there, and we can all see you there. Good. Okay, so today we are going to cover a couple of things. I have a guest speaker today, Elijah Marks, and he's going to show us something that he's been doing for a very, very long time. Elijah is a pretty sharp guy. He's been doing a lot of trading for many years. And then tonight he's going to show us something tonight, this morning, whatever. He's going to show us a little bit about what is going on. So he's going to let us peek into his black box. And so he's doing things that go pretty fast for me. I'm kind of the guy that gravitates to the monthly, the weekly, and the daily chart. He does as well, but he also does this really short-term stuff as well. And so I'm going to let him kind of show you what he does and how he does it. And I'm going to ask as many questions as possible so that we can get as much information, process as much as possible. And I think we'll be good to go. So I'm just going to unmute you, Elijah. We can all see your screen, so now you can show us your magic. And then when we're finished with Elijah, then I'll question that I got regarding other things. Elijah, can you hear me? Can you other guys hear me? Switched on. Can you guys hear? Come on, damn it. Hello?
Okay, can you hear me now? Can you hear me now?
Yes, now I can hear you. Cool. I thought everything. Yeah, loud and clear.
Okay. Just a little bit of lag. I'm going to close this here. And you can hear me,
All
right?
good?
You can hear me, Sari? I don't know if I'm lagged.
Yeah, loud and clear.
All right. This thing's been coming down. I'm on the 5 minute. Let me zoom out so you can see where we're at here. But basically, we were coming down. We had the meeting, Bank of England, and we ran up to this daily resistance 1. And it just fell off. I guess the market saw it as dovish, but I see it as a buy. And I'm pretty glad that it moved all the way down here. I'm going to zoom in a little bit. It come down quite a bit, and I'm going to zero all the way in here. Okay, and I'm looking to buy, and I mostly only want to buy. I mean, if it goes up, I might sell a few, throw a few back. But,
Hey, Elijah, can you put the microphone a little bit closer to your mouth? It's a little bit faint.
Okay. Yeah, I don't got the. I still got
Cool,
the old
better.
thing. I did it in the thing, but okay. So I've only bought. Wait a minute. Okay, so I bought one just a minute ago. and it already closed. But what I'm looking to do is mostly this is going to be a lot of watching, like right up here. But I'm looking to box it in is what it is. And during this time from 3 to 4, heading into the New York close, I don't suspect we're going to get a lot of action. The spread is, let me see. The spread is six tenths of a pip. So mostly I would just want to be buying only. And you can see we're pretty zoomed in, so we can't see the full, you know, but we know where we're at. We're at the bottom. We're at 130.60. I'm mostly going to be long. I might throw a couple shorts in there, but, you know, from here I'm going to long and short, so I'm going to use the DOM. And on the DOM, typically if you have, let me see, they're tight spread. So we could go as little as 1.5 pips, okay? And I'm just basically default at 0.1. But mostly I want to be selling. Okay, so I sold one there and I bought one there.
Where are you getting your directional bias from? Because you just said that you're expecting it to move higher earlier on, and now you're selling. Trying to explain like the logic behind the buying and the selling. What is it that making you think it's going to go down and up?
Well, what it is that I listened to the Bank of England, the press release this morning, and I listened to every word. I listened to the question and answers, and I watched the price during that. I've been trading the pound dollar all day, and so what it is right now we went down. Well, before the news, and this is just off the top of my head, before the news, we went up to like maybe 132.80, and then we came down from the question and answer session. You said some things that were a little bit negative, but I don't think they really meant anything. But all it was enough to draw it down. The price went down to about 130.50. It might have touched down to 130.42. I was accumulating longs the whole way. And since I knew it was going down, I had shorts, but not quite as many shorts. So right here from here, the last swing low, and this is just off the top of my head, was at 130.42. So here I favor the long, and although I got one buy and one sell, I'm mostly going to be buying. And I typically don't use well, I like to have an attached target every time I place an order, and 15 is kind of small. It's kind of small, but let's see. Well, I guess that one closed for well, it wasn't that much. It was 3 pips. Okay, so that's what the target was. But on this, I'm expecting it to go. But right now, I've got one long and one short. And what I want to do is, in this range, I mean, I'm in a 1 minute, but let me move to a 5 minute. But this is a very tight range, so that's why I zoomed into the 1 minute. But in the long run, I want to be long. I don't want to have too many shorts. But I realize that it could very easily go back down to here. And so, you know, here, I want to be buying. Okay? Now up here, obviously, I already got one to sell, and I want to sell them up here. But it's bullish. So on this, I'm going to raise this to 33. Call one. I'm going to buy one. Okay. So what I'm expecting during this time, heading into the New York close, it's really not going to move out of this range. And on here, I've got a spread of about, you know, less than 1 pip. And I'm not looking to get a lot, you know. 3 pips is fine. If I can get 3 pips, 3 pips, 3 pips. And so right now I've got 2 shorts. And let me move this up. In fact, I don't even need all that, but I'll move it up a little more. Okay, so I got, and this here, I put this on here for when I get a lot more orders. But I mean, basically, I've got, it tells me what orders I got on without having to see down here, because when you order get to be so many, you can't see them, you don't have to go through scrolling. But what it is on my other account, I've been long this, and I've got a bunch of targets here, so if it gets above, too much above 60, I hitting some of my targets on the other one. But in the long run, I expect it to go up. But for this last hour, I expect it to just go back and forth, back and forth, back and forth. And I got a tight set, and it doesn't look like. Wait a minute. Okay, so see, that one closed. That one was set for 15 pips, which is really 1.5 pips. So it took $1.50 to cost 70 cents in commission. So that one made 80 cents. Okay. Now, not a big deal, but if you can make 80 cents all day, in and out, in and out, and I mean, I don't know how many.
Yeah.
That's as low as you want to go, because what it is in this time of the day, we're in a, we're going to be in a tight range, but you want to play it both sides. Here, I want to be long. I've already got some longs in here. And here I want to be short at the top, and then it doesn't even matter at any point. Buy.
So you simply, I'm going to interrupt quickly. So by cascading your orders in like this, like we can see on your chart, so you're simply playing the natural movement in price, how it goes up and it goes down, up and down.
Yeah, and I'm following it in a way. What I am is I'm a liquidity provider, because what I'm doing is when I place an order at market, I'm taking out the liquidity, but yet I'm replacing it with my liquidity, and I'm putting my target at 2-3 pips. So basically I'm taking it from the bank, and then I'm sticking the retail trader for 2 or 3 pips. And I'm not, I don't have any stop loss here. And yeah, I got 2 short and 1 long, so at any time I can just buy one. And now my risk, I have no risk, because whatever it is my risk is here, it's locked in. Because if it goes up 200 pips, I'm going to gain on 2, and I'm going to lose on 2. But
okay, so you're just ultimately hedging.
Ultimately hedging, but only if I need, to be, because at any time here, because of the time and the time of day, it's not going anywhere. I mean, for the next 45 minutes, it's not going anywhere, and the spreads are going to be low. After 4 o'clock, the spreads go to hell. Okay.
Yeah.
So what we're doing is we're racing into the New York close, and we're hoping for some big guys with some big orders so that we can take advantage of them. But I mean, right here, we're getting up here at the top again, and I'm at 33. Maybe I should lower it to 23 because we're in a very tight range. But I've got already one, I think, here at the top. But I mean, I'm buying at the top and I'm selling at the bottom. So what I'm doing is I'm playing both ends short against the middle, and then, if it wasn't this end of day thing, I'd be playing both end zones, which is the extremes, the high and low of the swing high, back to the middle. Because no matter what anybody says, the market is not trending in nature. That's bullshit. The market is reversing in nature. And if you learn to play the reversals, you can make money on the reversals all day. They might catch you on 1 or 2 here and there, but what it is it's all supply and demand based. And so no matter what time frame you're on, now this one I don't have the Pipnotic software loaded on this one, but let me see. I got some kind of S&D here.
So what's the reasoning for buying at the highs and selling at the lows? What are you expecting to happen when you're doing this? I mean, obviously.
No. I'm not buying at the high and selling at the low. I'm buying at the low and selling at the high.
Okay, good. Because you said that, and I was a little bit wondering. Okay, cool. So you're expecting price to simply just to rebalance itself constantly.
To return to equilibrium. The nature
right.
of the price action is to return to equilibrium.
Okay. So when price is moving higher, you simply expect it to return to demand to seek liquidity required to push price higher, and you're doing the same thing to the upside.
Exactly. And
okay, so you're getting that, Shan and Murray, what he's saying there. So, I mean, if price comes down, it's moving into pools of liquidity, so bullish liquidity, so limit orders that are down there. And when price comes down there, he's going to be buying, and of course, this buying is going to drive price high. So he's buying at the lows and selling at the highs, simply playing the way that the price moves. Price is actually moving based on unfilled orders, not filled orders. So looking at a price chart, you actually have to focus on what you can't see on a price chart. You have to focus on kind of these like the pools of liquidity. And so the software, supply and demand software, for example, can help you identify where these nice blocks of sell orders and buy orders are located. And this is ultimately where Elijah is positioning himself. So when price starts moving down, he starts buying as price moves down, because he knows at some point the sellers are going to be overwhelmed by the bullish liquidity, and this will drive price higher. And he's getting out of profit. Sorry, he's taking his profits as price approaches or starts to line up with the sell orders at the top. Is that as close to what you're doing?
Yes, it is. And you can see here, this is not the Pipnotic at the top, but this is definitely a zone here, because you know we come up into here, we fell out, then we came back up, and now we're coming up. We're coming down, and then there's another.
Can you step closer to the mic, Elijah? Your voice is pretty faint.
There's another zone here down into this gray area. See, I probably got 6 or 8 or 10 buys down here, and some of them have markets, some of them don't. But see, I don't really care which way it goes, because before I walk away, I'm going to balance this out. So, right now I got 5 buys and, 6 buys and 1 short, and I should have had more shorts here going down, but it's okay because I'm biased to the top side, and I know that as soon as it hits this gray area, it's going to want to turn around, because there's a lot of buy movement.
Yeah.
And so when you run out of sellers and you have nothing but buyers, then the price, it has to go up. It just has to go up, because what always exists. Oops, I'm back. I lost the mic for a second. Good, right?
Yeah, all good.
Okay.
Elijah, Heidi has a question. I'm just going to read it for you so you can get it. She says, so you always have an equal number of buy and sells. When one is taken out, do you replace it with another, and when? Do you wait until it gets back to where the pivot is?
10 minutes down to the bottom of the hour, 10 minutes before we expect to get numbers from Apple. Just a reminder, Street that's for $1.86 on the EPS front and revenues of 51.17.
Hey, will you mute the Rand Squawk for us?
I muted it. Okay, so
cool.
Now
excellent.
Looks like it's starting to turn around here again. Because I'm just going to buy one. It doesn't move very fast at this time, which is fine. I mean, I don't mind it when it moves slow. But I close that one sell because it looked like it's going up. So right now I only got buys. And so from here, all these are tight close in the money. Some sells are up here, but it's hard in MT4 to add another one when you got one already at that level. But see, this is where I want to sell up here. So as price comes back up into this supply zone, and you can see it marked here in the magenta. I mean, this ain't the Pipnotic, but it's very, very similar, this zone here, which, we can see that it fell off from here. And then here we don't know if this is going to hold. But like I said, ultimately, I expect this to go up. So psychologically, I'm biased to the long side, and I'm not going to have a lot
Okay.
of, and I'm going to want to buy as it goes down. And the reality is that if you look at it, on the last run down, it only got down to here, 130.53.
Yeah.
And so in order to get here, it came down off of, just from memory, it came down off of like 132.80. So what we're looking at here is we've been going down for about 120 pips. And so what the reality is that the smart money has been accumulating longs, and they're going to continue to accumulate longs. And it doesn't matter if we go down here, we go down here. But what happens is if you get back down into here again, the longs are going to get thicker and fatter and thicker and fatter and thicker and fatter.
Yeah.
Because what
Right.
it is it's a reality that the lower that it goes, the better that price is for the bank to buy. And the bank buys out of value buying. So they're thinking long term, not 5 minutes, 10 minutes, an hour. They're thinking tomorrow, next week, next month kind of thing. And
Right.
the ones that I like to particularly stick to are the ones that are positive swap. I don't like to get into a position that is negative swap. So ideally, scalping for me is really, a chance for me to get into a position, a long-term position, and then hold this position. And the reality is that after we went down, all that we went down, this is a value buy here. There's no smart money that is selling pound dollar at 130.50. I guarantee you that. I follow the market from open to close. I follow all the majors, and this came down, but trust me, you don't want to be short here. I mean, you might want to be short one or two if you got some other longs to play against it. But see here, if I sell one, that's not going to hurt me. I mean, 1, 2, 3, 4, 5, 6, 7. So I got 0.70 going up and 0.1 going down. So if it goes up, and you catch me with one short, you think I'm going to be upset if it goes up 300 pips? I'm not. I mean, I'll take my profit on all those, but see, obviously I've got it close on some of these, but some of these there is no target. Okay, so if it goes up 200 pips in a minute, if I go to the bathroom, it goes up 200 pips in a minute. Yeah, they're going to catch me with one short, but they're also going to catch me with 3 long. So at any point,
Yeah.
I'm going to be in money. So typically, when you're hedged, if it's going one way, you don't want to allow it to go that way unless you have more orders going that way than the other way. So, sometimes you got to balance out. Sometimes you got to let it go against you. But the reality is that there's no way that you're ever going to be able to enter all your trades and always be in the money. Sometimes it goes against you, and it's a matter of fact that the majority of the times when the bank enters long or short, they are entering long or short against the trend. And then what happens is they continue to enter at market, and they cause a slowing momentum. And then when they finally get to the point, which is a strategic level, which is a significant price level that they've already identified before, that's where they want to reverse it. And when they want to reverse it, they just come in at market with a whole bunch of orders. And they don't want to come in at market with 100 lot. No, 100 lot is not it. Because if you hit them with 100 lot, it's going to jump way up. They want to trick as many retail traders as they can into thinking it's going to go down because they need people to enter short, so that they're getting the other side of the trade. So they're accumulating longs, and they've been accumulating longs on this one all day. Now here we are back here again.
Yeah.
And I got, I don't know, I'll close that one. And I still got mostly longs. And I don't know, I guess it hit one of my cells. No, I did a bunch of my cells. I've got 5 cells and 4 longs. And so at this point, you know, these are 0.1 orders, so this is only 2 pips. But I'm expecting it to tear down here just because of the time. Just because of the time. I mean, in the long run, it's going to go up. But in the short run, it's going to keep going back down because you have stupid retail traders that, I don't know, they do the opposite of what they're supposed to do. When they get to the top, they buy it. When they get to the bottom, they sell it. I don't know why. I mean, at the top, you want, no matter what the range is, at the top you want to sell it, at the bottom you want to buy it. And you know, even in this 1 minute range, I mean, we're only in, I mean, what is it, 10 pips? Not even 10 pips. I mean, we went up here, and now we're locked in between here and here, and we're, you know, we're like 5 pips. You know, but our spread is it's less than a pip, and you know, usually I show the. Well, that's fine.
Yeah.
But it, you know, I'm expecting to go down here, so I'm holding on, and then when I get back down to here, I mean, I want to buy in this area here again.
I see.
Here,
Is it you? I mean, now it's getting late in the day, as you said earlier on. Do you have any like time of day considerations? Is now a good time to trade like this in contrast to when London is moving at full force?
Yeah, it is, because you just got to adjust your range, because here you have very little risk. Very, very little risk. I mean, the risk that this is going to jump out of a 5 or 10 pip range heading into the New York close, it's not very likely, because everybody took profit up here, you know, and everybody took, I mean, when it was down low at 130.42, all them shorts took profit. And then the bank bought, and they started to run it up. And so now we're kind of caught in between again. And if you look at something big, you know, you can't see nothing, but if you look here, I mean, this thing ran down to the weekly support 1. And
yeah,
these are figured some other way, but if you look at the, I mean, if you put the Pipnotic on here, oh, look at that. Oh, that's not Pipnotic, but the supply and demand zones are very close to what these zones are. This is where it's came down to before and turned around. So that is a significant level, because when it came here and it went back up. And this is obviously 130.00. So you got a psychological number there. You've got a demand zone, but it's not even likely it's going to get to there, because what happened is we got to here. Oh no, we didn't get to here before. We only got down to 130.40, which was here, and then we bounced off of here. But this was after we came down, you know, I don't know, 150 or 180 pips. So, you know, the thing is you got to zoom in and see where you're at here. And where you're at is you don't have a lot of volatility, but you've got a little bit. And, you know, this was a fresh account. And, okay, so we only made $12, but we're only drawing down 10, and it looks bullish. I mean, you know, we can't here, but the reality is once it gets back up to here, and then here's your 23.6, you know, it's going to want to come back down, because there's order to sell here. And so what it is this supply and demand, it's always kicking, because what it is there's orders here. There's pending orders here, and up here, well, we didn't see where they were, but, you know, they're higher on here, but there's still some orders here, even if they're not showing. But what it is the main flow, it's up, because it came down to here, went up, came, and I realized it went down, you know, first before it got here. But that's because the news event was taken as dovish. I didn't really see it as dovish. You know, in any news release, is really just only a chance, and it's a stimulus for you to get orders at a better price. So you've always got to be thinking value buying and value selling, but also as it lines up with supply and demand. And see, I told you it was going to come down.
Okay.
So I'm going to buy one here. That was a little slow. But it's going to, it's for the rest of the session, 30 more minutes, it's going to stay in a tight range of 10 pips. And so if we can sell it here and buy it here, we haven't made a bunch, but it's also very calm after the news. I would have thought it would have been a little more, jumpy, but it's not really as jumpy as what it should be. But Thursday is usually a really jumpy day, and so you see we're here. We got six sells, 3 buys, and then generally I like to get more, but it's usually in a wider range, so I'm not going to take $1.50 with a 70 cents commission. But after it does this spike down, then I'm looking for it to go back up. Because
Elijah, Heidi has a question for you. Can you see the questions, or you want me to read it out for you?
Read it out for me. I can't see it.
Okay. She says, hypothetically, if the small range starts to migrate down, for instance, and you get caught with 1 sell and 5 buys and just continues to migrate down, how do you handle that?
Well, I like to continue to add buys. I'm constantly entering against the trend with small targets going the other way. And so what happens is if they eventually break out of my range, then I'll let them go. And then later, before I walk away, because they didn't come back and take me out with 2 pips, I'm going to charge them more now. So I'm going to raise my targets, like on my longs, which I only got a small target on here, but I'll go like this, and I'll say 1.36. 1.35. 1.35. I'll do 1.34. Okay, so I got 3 buys, and I'll just hold them. And so it's gonna, well, I'm gonna get rid of this, man. Get rid of this, man.
But you're confident to do that because you're buying at major demand, right?
Yeah, because we're at the bottom of the range.
Right. Okay. Yeah. So you're not just like making trading decisions based on the 1-minute chart exclusively. You know that over the longer term, price will grab. Okay. That's okay. Super.
No, I've been following this pound dollar for like 29 years.
Right. Okay.
I followed it all the way down, and yeah, I was accumulating longs on the way down on my other account, but I also was selling it, and so I got paid to sell it. And then when I got down to the bottom, they kind of caught me at 130.50, but then I still got them for some shorts below that. And then when we went down to 130.42, I got rid of all the shorts and only went long. And then I held the longs all the way up to like 60 before I started shorting back again. Okay, and if we go into 5 minutes, you can see we can't but it started coming back from that 130.50 pretty hard. I mean, it dipped below it once, and then strong buys up to I guess it was up here, whatever this was, 130.70. But I mean, I definitely favor to the long side, and now it's down here again, and now I want to buy another one with no target. Buy another one with the target, and I guess I missed it. It jumped before I could get it down there. But hold on a second, Sareed. Give me a second. I'll be right back.
All right. Vincenzo, I hope I'm pronouncing your name correctly. Well, I mean, he's doing this on a lot of different currency pairs, but he's focusing, I mean, ultimately he's doing, I mean, his top-down analysis, so he knows which pairs are overextended. So we're experiencing a high degree of imbalance in supply and demand, so we have like a big price inefficiency. And so price is reacting at a major opposing supply and demand. So it looks like, if you look at the price structure, objectively, it's going up very, very strongly. And so most people would think that, okay, price is moving higher, I should be buying. But if you pay attention to what supply and demand is doing, how the flows are exchanging hands on the price chart, you'll notice that, okay, price has reached a previous area where there is a higher interest in, for example, selling. And so this is where he gets his bias from. So price is going up to an area of supply. He knows he has a short bias for the short to medium term, and then he's doing this on the 1 minute chart because in anticipation of price to start to break down. I've been watching. He's been doing this all day on the Kiwi dollar. I'm doing the exact same thing on the Kiwi dollar, and so he's just waiting for price to reach an opposing area of major supply and demand, and he's positioning himself in that direction, just entering on the smaller time frames to do that. And this, of course, enables him to kind of get his risk out of the trade relatively quickly, as we've seen here.
Well, and what you want to do is, you know, the whole goal in mind is to bank some pips, but what it is it's to position yourself and to get into a long-term position based on some other intelligence. And to me, you know, maybe I got too many going on the way down, but I mean, I was buying, and the bank is buying. I can tell you the bank is buying pound dollar, and in the long term, okay, it might dip a little bit, you know, due to the rate hike in December, but this pound dollar is headed back up into the, you know, I mean, it's at a low. It's at a low. I mean, the nature of the market, it's not trending, it's reversing. The nature of the market is to retrace 100%. No matter what time frame you look at, it's always some sort of stimulus that the bank uses to get retail traders suckered into the trade going the wrong way. Now, they might make a couple on the pip, a couple on the trend, you know, going the one way, but, you know, when the bank comes in and they hit it with those big orders, the thing's going to leap. You know, it ain't going to go 10 pips. It's going to go 50, 100, 200 pips. And when it's 200 pips, you sure don't want to be caught on the other side. And what it is this pound dollar, now, I don't know, maybe not tomorrow, but next week, it's going to leap up. I mean, don't get caught short on this. I mean, if you have, you know, if you have 4 longs and 3 shorts, that's too many shorts. You know, I mean, and see how these are set to the long side. I mean, these are set for, you know, long targets because that's where it's going long term. I mean, it's not going there right now because what it is it takes the pending orders. Think of it this way: pending orders, they pre-pave the path where price can travel. Ultimately, price travels the path that retail traders decide to take it. But don't be fooled, because what it is that, here, look at this one. Look at this one. Now, this is, again, this is a different chart, but these are accurate prices. This is the pound dollar. This is the 1 minute chart, okay? It spiked you down to about 130.42, okay? Now, guess who bought down here? The bank was not selling here. The bank was buying, okay? Then it went back up to here. The retail trader said, oh, no, it's going down. And then the bank said, no, they bought. Then retail traders drove it down, and the bank said, no, they bought. Retail traders drove down, the bank bought and said, no, Then they sold it, then the bank bought. Okay? So you have to see what's happening here. What's happening is the bank is long right here. Right here, the bank is long. Okay? They're going to defend this level. So what that means is when it comes down to here, they're going to buy. They're going to buy. They're going to buy. They're going to buy. But you bet your britches, when it comes down here, when it comes back down to 130.42, you think they're just going to give you all their money and jump out of the boat and drown themselves? No, they're not. They're going to add more longs, add more longs. And what the reality is that you got smart money and you got dumb money. Smart money plays for the long term, and they do value buying. They buy when it's a good price, when it's a good value. I don't know where they get the psychology, but that's what they do. And so this is a good price. This is a good price, and you know, this is a good price. Now you might not think that's a good price, but it's a good price. It's a good price. Anywhere here is a good price. So we hope it comes down here so that we can get more longs at a cheaper price. And what it is,
Right.
Careful. You don't want to get too many longs too close together, too big a lot size. You want to cascade in and fade the bottom. Well, the bottom is or was I think here 130. No, it was even lower than that. Yeah, I think we came down here to 130.43. And so see, we have another zone has formed here.
Yeah.
Of course, we want to buy there, but I don't suspect it's going to get quite that low. See, because the lower it goes, the more banks are buying. I mean, if you paid attention to the Bank of England, the guy was very confident. Now, I know Sari doesn't rely very much on news events, but based on what the Bank of England said, you can't miss it. They raised rates. Now, whether they were dovish, I don't really think they were dovish, because what they did was they verified to the Rand Squawk news guy that there was going to be, that they were planning on 2 rate hikes next year. And so, and he also said when somebody asked him, were they going to play this tit for tat? No, we're not. We don't care what anybody does. We're not going to raise you. We're not going to call you 25 and raise you 25 like the Mexicans. We don't care. So what it is they said we're independent, and the Bank of England is going to raise rates when we see fit. And to me, that's dealing from a position of strength. Okay, now the Bank of England does, you know, they don't get involved in all this, you know, like the Swiss National Bank or the Bank of Japan or even the Bank of Canada. You know, the Bank of England is a little more hands-off. They don't get so much into the trading. But, I mean, you start farting around with the Bank of Japan, and the Bank of Japan, they'll enter the market. I mean, they'll place orders. And so, and the last time we were down to 1.0 on the dollar yen, I told everybody, I said, if you sell below $1, you're dumb. You're dumb. Because you know who's taking the other side of your trade? It's the Bank of Japan. So if you think you're going to trade against the Bank of Japan, man, you're really confused. Because nobody
Or wealthy.
in the world has more money than the Bank of Japan. So that's the last person you want to get in a fight at the line. If they're selling and you're buying and they're selling and you're buying, they're going to whoop you. Because in the end, the Bank of Japan, they're not going to run out of money. They're not going to run out of orders. They're not going to run out of bullets. They can just keep shooting. Long. What, you want to sell? Man, we want to buy everything you got. Keep selling. Just like the Swiss National Bank. When we were down at 95, I told everybody, don't be short here. The Swiss National Bank is offering franc for dollar here because they know something. They know that in the long run, this 0.95 ain't going to stick. Well, here we are now, 500 pips higher. And, we're at 0.100, which, that's not anywhere I want to buy. But, it might be a good level, because once you get above that level, now you got a lot of support at that level, and there's a lot of buying to hold it at that level. But, I want to buy lower. I want to buy 95, 96. I mean, I've got some orders in, and I can show them to you.
I suppose you can transfer the psychology to buying goods as well. If a television, you want to buy a television, it doesn't really make sense buying it when it's most expensive. You want to wait until there's a good deal on it, I think the same psychology can be transferred to buying anything or selling anything, really.
For sure, and you see here on my, now this is USDCHF. I'm waiting to buy. I'm waiting to buy for almost 2 months. Okay, 9/11, 9/11, 9/11, 9/11, 9/13. I mean,
yeah.
94. I'm up to 96, and so you know what? We're probably never going to get here again. We might, but you see my orders here. Now this is where I'm buying. I'm not buying up here. I'm sure not selling up here, but I mean maybe one here, but the predominant trend here, it's up, it's up. I mean, and so it's like this pound here. This is not something you want to be selling here. Now see my this magazine look like it crossed. Here you got a double zone here. I mean, yeah, you could wait and buy at 130, but I mean, you want to be long before that, because it might not get down to 130. And I'm telling you, this thing is going to go. Here's the monthly resistance 3. Oh, it's at 138. Okay, I might have overshot that one, but yeah, here we go. Monthly resistance 2 is at 136.10. Now, if you look at this chart, we went down from this. Look at this level. It's at 432, 423. Almost got up to there, but I mean, you see how it fell off, and so what we got here at the bottom is we have a struggle here, because as soon as you dipped into here, somebody bought it. You dipped into here again, somebody bought it. Now, this is not where you want to sell it, because what's going to happen is it's likely it's going to dip in here, and it's going to dip in here, then it's going to go back up to here, but the whole way that it goes is based on these orders that are pending. So the flow is always based on the orders that are pending, but it's also very, that's my ADX just turned bare. So, I'm looking down on all these charts here, but the monthly is still up. And the reality is that after we've fallen down 140 pips here, it's a lot more likely it's going to go up 140 pips before it comes down 140 pips. So it's very likely we're going to get to this DR1 at 132.94 before we get anywhere near this 420. Because the buyers are in here. They're in here, and they're in here, and even though this all says bear, that's only based on this last thing. Because you've always got to be contra-trend accumulating orders going the other way. I mean, that's how the bank does it. And that's how they make money every day. But the thing of it is now here, if you look here, you say, oh, well, now look at this. This thing's crossed, across, I mean, we're on the 30-minute. Now, this doesn't mean it can't come down to here or here, but the reality is that once this thing hits 130, you might as well say hello again to 132, because all the people that are buying here, the further you go down, the more buyers there's going to be. Okay, so now the news is over. You know, there's no more stimulus, and so what it is the thing. In order to get legs, it's got to have a stimulus, because once everybody gets trapped in their trades, they're stuck where they are. So somebody has to have the orders to get them there, because it's an auction market. You just can't jump. The only way you can jump is like right now. If I placed a sell order at market for 100 lots, you bet your ass it's going to jump down. I mean, it's going to take. You know, it's an auction market. It's got to take out all these orders, and so the guy that places an order at 100 lots, he's going to get slipped, and then he's going to show his hand. So then you're going to know which way he's going. And so if somebody's coming in with 100 lots, man, you don't want to be going the other way. You know, it's just like when you see price. I mean, I can't see an example, but when you watch price grind up for 3 hours, and then it falls down in 3 minutes, that's not something you want to be long. I mean, yeah, you want to be short at the top and long at the bottom, but you know, if it grinds up for 3 hours, it takes it 3 hours to go up 100 pips, and then in 3 minutes it falls down 100 pips. You don't want to be long, because the predominant force is always down, and it always goes by flows. If you look at the flows, and I know daily's probably not the one to do, but I need to zoom it in a little here. But see here, here's your flow and reversal, and it didn't even get back up to there. I got to get some. Yeah, so see here on this this fractal up, and then this is a zone here, and you can see how it fell out of this. I mean, obviously, when it comes back up here, okay, you want to be short, but you know, that's almost 133. I mean, we're at 130.60, and the reality is that, you know, the nature of the market is to return to equilibrium, and so it's been falling down, and it can only fall down so far. Let's see where are we at?
Are you paying attention to, you know, like, you know, I like to talk, you know, all the quality checklist I have, like when you look at supply and demand and like you assess like the quality of it. Are you paying attention to this at all, or are you just like looking at these like pure price imbalances when you're making decisions?
No, I'm just looking at the pure price imbalances because of the time that it is. It's not going to be a lot of action here, and I should have sold one here.
I see.
But I can't. And then it just formed this one here. So I mean, so now you got some demand here, and you can see, you know, it spiked down, but it all got bought up. You know, and it got bought back up quick. And now here, I mean, I'm buying. I'm buying here. DOM. That ain't what I want.
Do any of you guys have any questions you want to ask? Because Elijah has to head out shortly. So if you guys want to type your questions in there quickly so we can get them in before you. Yeah.
You don't play that. You don't play that. You ain't running on me. I mean, I'm gonna get you if you run. I mean, you ain't running. Not at this time of the day. I mean, see, they're heading into the close. I mean, it ain't gonna go that way. That's a trick. I mean, it can only go so far down. before the close, then it's going to turn around. Watch, I got, I don't know how many I got up there. I better make a bigger target. So what I like to do is I like to go 33, 43, 53. Oops. You see how I'm making a grid? Now that one's a little wide.
Yeah.
But you see how I'm fanning them out. And like I said, this ain't going to continue here. You know, when this goes down like this, it's only stupid people are selling. I mean, I've been doing this a long time, and, you know, it's always like the fake. It's always like the fake before the real thing. It seems like, you know, before they go up, they got to take it down. Before they go down, they got to take it up. I don't know why they got to fool retail traders and then, you know, catch them at the thing. I mean, so, you know, they started to think it was long, and now they think it's going to be, it ain't going to be short, man. That's horseshit. It's going up. I mean, here we are again at this, well, it's not even that low, but it's pretty low. I mean, 50, you know, once you get below 50, I mean, you're getting in a fight with a lot of buyers with a lot of money. And if you got a little bit of money, you don't want to get in a fight with a buyer with a lot of money.
Right.
Well, let's see.
Cool.
Oh, that's not even.
Okay, Heidi has a comment here. Sorry, Heidi has a comment here. People are thinking it is going to go down tomorrow for NFP, question mark. What are your thoughts on that?
Well, we saw the ADP on Wednesday, and the NFP doesn't always follow it. But my feeling is that on NFP, it's going to be bullish for the dollar. But all that is going to do is cause me to space my buys out further so that I don't get, you know, too many, and so that I realize that, okay, this pound dollar could go down to 130, but when it gets to 130, man, I'm buying. I mean, and look at it.
Yeah.
I mean, you see how it came down. I mean, don't tell me that thing ain't bullish. I mean, look at it. Somebody's buying. Somebody's buying like a wild man. I mean, you don't want to be short here. I mean, maybe one or two, but let me get where did I still got that account here? Oh, this is the one. Okay. Ah, that ain't even the right one. What is that?
Yeah, we can see kind of a split screen. We could see your MT4. There we can see it.
One, yeah. What do you mean I can't close that one? See, that ain't right. I should be able to close that order.
Ah, it's 10 o'clock. It's because they're shifting the clocks, and give it 1 minute and then it'll reopen. Give it 2 minutes because the clocks are just rolled over.
Yeah, it's kind of sticky. But you see, it formed a zone here, and it's only on the 1 minute. But you know, you want to be buying here, and you don't want to be selling back with too many. It's okay to have 10 longs and 1 short. You have 1 short as an insurance if you want to give some back. I mean, but you know, the reality is if you have 10 longs and 1 short, then it goes up 100 pips. Oh, you know, I got 900 pips plus, but I'm down 100 pips on this other one. Well, who cares? Close them out. I mean, you know, I would gladly take 900 plus with a minus 100 for a net of 800. You know?
Yeah. Very interesting. I think it's pretty interesting the way that you are kind of simply just playing like the natural movement in price as it kind of like wriggles in a direction of the predominant trend.
See, I only made 20 bucks, but I mean, we're not in a, I don't know. Oh, there we go. We got to close that. We got to close that.
Yeah, there we are. The markets, or the broker opened again. Yeah. Do any of you guys have any questions? Because I know Elijah has to head out shortly. No questions?
And you see,
Hey, Heidi. Great pleasure.
I only got buys. I got no shorts. And I have very few with the close target. So I got 2 with the close target, 3 with the far target, and the rest of them are wide open.
Okay. Good. Cool. Very good. Very good. No questions? I don't want to keep you, Elijah, any longer than you. I know you said like 1 hour sharp, so.
Yeah, I got to go, but I'll have a better headset and speaker next time.
Oh, cool. That'll be great. Yeah. Nice. I'm going to go over like a couple of things. There's an email that came in and like drawing supply and demand, so I'm going to go over that quickly as well.
Okay, thanks, Sarita. I'm going to run. Appreciate it. Thanks a lot.
Hey, man, thanks so much. Thanks for being in. Enjoy your grandkids, huh?
Yeah, thanks. Have a good night.
Hey, you too. Cheers. Okay, I'm just going to show my screen. Where are we? There we are. Good. Okay, let's get a chart up here. If I can do that. Okay, cool. Okay, cool. Okay, good. Okay, I just want to go over. Thanks, Elijah. That was really interesting. It's pretty funny. You might have been watching Elijah do some trading, and it's pretty interesting. He's also really going. He's very busy on the charts, just for illustrative purposes as well. But when you watch his charts, it's very interesting what he's doing, and he's just simply playing these micro movements in price. How prices kind of you can see very clearly here. Like for example, on this, I have all the Pipnotic software switched off, so I have to do this stuff myself. Let me turn it on. See, he is. Let me turn this stuff off. So he's waiting for price to reach these areas. You can see very clearly. I mean, price left this area of accumulation here, so price rallied, probably reacting on supply over here to the left. We accumulated orders, and then price fell, and we accumulated and we fell again. And so these imbalances that he's trading at, so for example, now would probably be a place where he would start to buy because price is reaching the upper area of this area of demand. And it's interesting the way he was explaining it, because let me see if I can draw here, pen. It's going to get the color. So I always consider areas of supply and demand as like plates on which there are located a bunch of pancakes. like this. And so the buyers and the sellers, they are simply forks, hungry people. And so, I mean, if you eat the first pancake here, the next person that comes with their fork, they're going to have to move a little bit deeper. So the first pancake was maybe here, but then once that pancake is gone, they're going to have to come down to the next level and to the next level and to the next level and to the next level, which is why he's cascading his entries, his buy and sell limits around areas of supply and demand like this, because supply and demand, it's not just one price level. If it was, well, then you would never ever get filled, because there's going to be much bigger money located at these areas and hours, so we're never going to get filled. So you have to view these areas of supply and demand as zones and not areas like that. And so price will typically come down into an area, will find an order, so price will find liquidity that is required to kind of give support for price, and it'll maybe have a bit of a jump, and it'll kind of wriggle around and digest liquidity, then it'll have another poke lower. And once it finds liquidity sufficient enough to kind of support price, well, then the order flows change from the bearish side to the bullish side. And so now we have the thinner side of the market to the upside and the thicker side to the downside, the thicker being the pool of liquidity that price could not move through. And so between here and here, we have a liquidity void. So there's thin liquidity, which means that it's very low risk to buy and sell while price is moving between the extremes. When price moves up here, then it's a better time to sell than when price is around here, like so. And so it's just a really good idea to ensure that you're buying and selling at the extremes. And so when he was, I mean, the pound shot down like that, and it was moving like that, I mean, there was demand, historical demand, so major demand, and price was getting closer to it, and it was overextended. So for the short term, price needed to rebalance. So price left equilibrium. So we left a liquidity void in the wake of this move, kind of like this one here. And so price has to rebalance. So price will leave, will cause a price imbalance, and then price will typically have to rebalance. And it'll typically return to the to fair value for the instrument that you're trading, simply by returning to the origin of the move that left the area of accumulation. And so that's pretty much what he's doing. It's pretty, I think it's pretty fascinating, like watching him move around. I think it's pretty amazing. Good. Okay, I just want to touch very quickly on drawing a supply and demand. I had a couple of emails about people asking, so I just want to reiterate that so everyone's really clear. I know we have quite a few new members in here, so I just want to make sure that we all know exactly what to do. So ideally, what you need to do is, I mean, I've made the software so that it's visually very clear what you should do and where. And so it's important to note where these green candles are, because these play a very key role when deciding which areas of supply and demand to buy or sell at. And so we look at this one here, and we have a green move, a green candle, which means we had a price imbalance. So when I drew that move lower here, just like the pound example that Elijah showed, price moved away. Here we have it here. This is a green candle. So this tells you where to start your hunt for areas of supply and demand. And so we have that candle here, and then you move left, and you want to look for these white candles, because these white candles denote areas of supply and demand, or accumulation, I refer to them. What does that mean? Well, that simply means that liquidity is changing hands. And so the broker, which is on the sell side, we're on the side, the buy side, they will buy to bring price low, which is kind of counterintuitive, and that's because they're on the sell side. We are selling liquidity, they are buying it from us, and our selling brings price lower. And so we identify this green candle that left the area, and then we have a look at the candles, these small body candles that represent the area of accumulation. So what we need to do here is we need to ask ourselves a couple of questions. So you start with this one here, the first accumulation candle. You ask yourself the question, is this an accumulation candle? And you can see it is, because it's white. Sometimes they won't be white, most of the time they will be, but it doesn't really matter. If they look like kind of dojis, so similar to like this, then they probably are accumulation candles. Then you ask yourself the question, is the body of this candle within the range of the previous? More or less. Good. Is this an accumulation candle? It is. The body of this candle within the range of the previous? Yes. Is the body of this candle within the range of the previous? Yes. Is this body this candle in the range of the previous? Yes. And then on this green candle, we can say no. So what we do here is that we have to mark off the lowest edge of the body of the lowest body, which is this candle just here. So this is where the area of the bottom of the area of supply would be located. And then you mark off the highest high, which is here, where the indicator showed us. And so you would draw the area of supply like this, from the lowest body to the high, like so. So this is what that area of supply would look like. And a little thing that it's really good to remember is when you have a big wick like you do here, this tells you that you should ideally be going to the smaller time frames to have a closer look, because there's going to be micro areas of supply up in this area here. So if we go to, for example, a half-an-hour chart and have a closer look, you can see we have price rallied, we accumulated for an extended period of time, we shot up, we accumulated for one period, and then we left. And so we have, let me see if I can get it to draw this green candle for us. There we are. So we have the green candle, and then you start moving left. Are you an accumulation candle? No. Are you an accumulation candle? Yes, I am. Is the body of this candle the range of the previous? Yes, it is. Are you an accumulation candle? No, I'm not. And so here, for this one, you would draw it like this, to the highest high, which is there. And so going from the 4-hour chart, we would mark it off like this on the 4-hour chart. But on the, let me color that blue, if you go to the half-an-hour chart, we are able to reduce our pip risk by going to the smaller time frame. So you find the micro area of supply located within this really big wick. And these wicks are normally a really good indication that you should be moving down to the smaller time frames in order to dig deeper and have a closer look at these areas of supply like that. And you can see here that we also had kind of a micro market structure failure where we had price rallied and we sat on this horizontal trend line, and then price went up and then it cut through it. And so the area of supply that caused market structure to fail is this one. The push that moved below this trend line originated from here, so the selling started here. So this is where we have our pancake. This is actually a play, and then inside this rectangle we have small pools of liquidity, which are ultimately limit orders looking to sell and move price lower. Keep in mind that I haven't paid any attention to the higher time frames, and so you have to do this, of course, before you do anything at all. And I'm going to do that quickly, and I'm going to do that on the dollar CAD because this is a question that came in. And so I was asked if this would be a good area to sell at. And if you look at it, you might think, yeah, I mean price left this area pretty nicely, and if you're taking a few pips, then yeah, it looks like a pretty decent area. But if you go to the big time frames, you realize that it's not a terribly good area to buy at all. And why is that? Well, you can see that, well, first of all, we can see on the monthly chart that we are in a downtrend. So we have a very clear downtrend on the monthly chart. So we have supply holding price, and we can see areas of demand being consumed by the opposing order flows. If you go to the weekly chart, we have a downward sloping trend line. So we had a weekly trend on the down chart, but price started to trade above and beyond this trend line, which means that market structure is broken. So that means it doesn't mean we're an uptrend on the weekly. It simply means that we have a bearish consolidation, which means that we were in a bearish downtrend, but now the trend line is broken, and so now price is wriggling higher from there. And only when you can draw a trend line that is sloping up, which I actually think we can. Let's have a quick look. Where we identify a low, we have to identify a high. So price leaves a low, it goes to the high, comes back to the low. Only when price trades above this high here, we can use this second low here. So we have the first low and the second low. So our trend line would actually go from here to here. And when you can draw a trend line, then we are technically speaking in an uptrend on that time frame. But not before that happens. Let me delete these here. And so you can see that price, I mean, what's price doing now? If we go to the weekly chart, you can see we're actually reacting at this really nice accumulation candle here. And so knowing that, would you still be comfortable buying on this hourly demand? If you're in it for the shorter term, then perhaps, but due to the fact that we're reacting on whopping weekly supply, it's probably not a very good idea to be selling at this particular time, because the risk, the pip risk on an hourly time frame is going to be very small. And so price is going to have a very easy time moving through this area of demand. Additionally, this is not a very good area of demand. Why? Because price has already been back to this level here. You can see price rallied. We started to drift sideways. And what does this tell us here? If you look at this, I mean, what is this price behavior telling us? Does this mean agreement or disagreement? Well, this actually means agreement. We have price, supply and demand in agreement just here, this area here. And so this is a warning sign. We don't want to take this, but there are very likely not a lot of people that are interested to buy around here. So what you have to do is you have to look at areas of supply and demand that are well structured and a lot clearer. And you can see we have one down here. We have one here on the daily chart. If we have a look, see we have this nice continuation pattern. As a matter of fact, I'm going to move that here. We'll have a look. And so actually this is wrong. We need to move it down here because the body of this candle is not within the range of this candle here. And that means that these two accumulation candles are not related. So we have a micro continuation pattern, how price rallied, accumulated, and then rallied. And so there's going to be a continuation pattern below, between these two. So price is going to rally, accumulate, go down, accumulate, and then move higher. And so this is what that means. That's why it's important to ask those questions. So we go like that, and so this is the new entry. So this is the entry that we want to buy around the 26, the 126.50 area. And so yeah, so I mean, if you look at this area of demand by itself, it might look good, but when you start going to the quality checklist, you realize very quickly, well, actually, it's not a very good area at all. Why? Because price has already been back to this area here. Okay, Jian is asking, dear Sabri, what if the next accumulation candle, the very next to the imbalanced green candle, is not the swing low or the swing high, and at the same time the body is not in the range of the swing high or the swing low? So we have this one here, for example. So if the body of this candle is not within the range of this candle here, if you have your charts open, if you could find an example, that would be a really good of that. Then I can have a closer look. But ideally, I mean, if you look at this one here, it's very easy to draw. I mean, you can draw very clearly. Look for the green candle. This is pretty much an accumulation candle, and it would look like that. If you look at this one here, it's very easy, like that. And the reason it's important to know whether or not, or ask yourself the question, is this a high quality area of supply and demand, is because if there are too many accumulation candles, it means that there's an agreement in supply and demand, and this is what you don't want at all. You want to see this. You want to see this. I mean, here we have 1, 2, 3 candles here, and then price left very quickly. But if you look left, I mean, there's so much trading in the area here, so much trading. And so this is fresh demand, but price has already been back down to this low just here. You want to see stuff like this, like a really big, strong move away. Okay, Jian is saying, is the swing high or the swing low included in the supply and demand zone? Sometimes, if you're, okay, on the Kiwi, where are we, the Kiwi? I'll find it here. On the Kiwi we have something, and on the yen as well, the dollar yen, we have this. So if we go, we have this, we looked at this in the past as a nice area, and there isn't really a swing low here, but it's a continuation pattern, how price rallied, accumulated, and rallied. It accumulated for one period, so we have an incredible imbalance in supply and demand at this area just here. This is what you want to see. But there's no swing low on the daily chart, but on the hourly or the 30-minute, you're probably going to see, or you're actually going to see price rally and then come and drift down. So you're going to see lots of swing lows and swing highs within this day of trading here. Simply by looking at it, you can see that. And so the answer to that is sometimes. But you can see that we had a really nice reaction on the first test, and so seem to be having a reaction now as well. And so we're expecting price to react off this, but it has been tested once, and so at the end of the day, you don't want to be taking areas of supply and demand that have been tested in the past. But we do have this one here. We have price rallied, we accumulated for 1, 2, 3 periods, and then price left. So if we have a quick look at this, you go left, accumulation candle, yes. Is the body of this one going to the previous? Yes, yes, yes. So we'll draw this one from the low of the lowest body to the high of the highest high in the area of accumulation. So it'll look like that. And if you're not comfortable with having 52 pips, then you go to a smaller time frame and you have a closer look and you try and refine it. And then you can see that, okay, the drop actually happened here. This is when we move below this low. So we have, this is more interesting to us now. So you could actually go green candle, accumulation, accumulation, no. So it goes from that huge one to an area like this, like that, roughly. And so you can cut your pip risk in half like so. But I just feel more comfortable leaving it like that because price can easily move back up into, can easily move into the thicket of liquidity, which is going to be up here. And you can see also there are some pretty big wicks here, which I don't like. When I see wicks like this, it makes me want to go to a smaller time frame and have a closer look and see if we can find something different. And you can see here the price kind of rallied, we moved sideways, and we have a lot of micro areas of demand here. We have this one here. The price didn't leave very well, so it's not really interesting. We have this one that's been tested, and this is kind of the only one that hasn't been tested. So you have to focus on the one that's closest to price and that has not been tested, which is this one just here. Okay, Thomas is asking, how do you enter the trades, take profit, and stop loss? I'll show you exactly, and we'll take that on the daily chart. So what you do is let's say that, just for sake of example, we'll mark it off like that. We'll say we like that. That's fine. What you do is that you would put your entry at the bottom of the box, and you'd put your stop a few pips above this box here, maybe 15 pips above this box here. And why is that important? Well, that's important because this is a little pool of liquidity here, and so the price has traded there, and so the fresh uncharted waters are going to be above the high here, because this is where price has not traded since this price imbalance was formed. So you would be looking to sell the 7150 area, and you'd be looking to place your stop above the box like that. And for targets, you would simply look for an opposing area of, in this case, demand. And currently we can't see what opposing demand looks like, because we might get something that looks like, that might look something like this. We have some really nice pushes up like that, and then price will accumulate, and it'll move up and move up. And so you want to watch as price comes up here. And if you have really nice, well-formed demand below this, well, then you have to ask yourself, well, is there then room for the trade? Ideally, you want the road to be cleared out, which there really isn't at the moment, because price can easily rally, accumulate, and form areas of opposing demand just below this, which reduces the likelihood of this trade working. And so ideally, normally I put like a 1 to 3, like that. So you have an entry, stop, 1 to 1, 1 to 2, 1 to 3, risk reward, and then I'll adjust it based on this, and sometimes even take it off if the risk reward is not appropriate, because you have to find the best trades and avoid the ones of the low likelihood. So, ideally you want to find, stuff like this. You can see that, there's no imbalance in supply and demand here until we get to here. This is where we had kind of sell-off, accumulation, and then sell-off. And even then, price had traded in the area for a very long time. And if you look here, we have supply. It was tested once, tested twice. So this would actually be like a target objective for long from here. Simply now it's after the facts, but we can see that when price came down here, when price actually reached the entry, there's no opposing supply. We have a little bit of supply here, but there's a lot of wicks and there's a lot of trading in and around the area, which tells us this is not a very powerful area to sell at. We have this, how we have one period of accumulation, price rallied and then sold off. We also had market structure failure here, so we have this trend line that was broken. The area of supply that did it was here. This is where we saw the reaction and price left from there. So this is where we'd expect we'd want to get out of this trade. It went further, but you're never going to get the entire move. And so that would that was a very interesting setup there. Okay, Shan is saying, what sort of success rate are you getting with 3-to-1 targets? I mean, it depends, because sometimes you can be in a trade, and other times sometimes you're going to get your potentials, other times you're going to get stopped out of break even or get a 1-to-1. But if we have a look at this one here, this is like a pretty good representation of the trades here. So here we had a 2-to-1, 1-to-1, lost 1, 1-2, lost 1, 1-3, 1-1, 1-1. I'm not sure what happened there. There's a 3-to-1, lost 1, +2, -1, -1, -1, +1, and so it varies, as you can see. But if we do like a save detailed report, and we have a look at that, the most important thing that you want to focus on is a parameter here called average profit trade, 12,000, 13,000, average loss trade, 9,500. You want the average profit trade to be bigger than the average loss trade. This is really important. If you're going to trade this way, of course, if you're going to trade this way. And you can see here that we're winning about 50% of the trades, and that's fine because our winners are bigger than our losers here, and so that pretty much results and we get an equity curve that looks something like this. And I've been looking at like Elijah's stuff, and he like the past 60 days, and he had like an incredible hit win rate of like 97%, 98%, but it's because he's doing it, he's trading very differently than this. I'm more identify the trade, put in the order, and walk away kind of guy. I don't want to sit on the 1-minute chart and trade it. It doesn't really resonate with me. I can't stomach that kind of trading. But it doesn't mean that you can't. It just means that it doesn't suit my personality. Elijah's awesome at it, and he loves to sit there and do it. He says, admittedly, there's very hard work, but if you have the patience, then you can certainly push through and do very well like that. Yeah. So, and if you look at this as well, here we had a nice area of supply here, and so price left, came pretty close to it, so we tested the bottoms, as we spoke about, like these layers, these small pockets of liquidity in and around these areas of supply and demand. Price, there was so much selling at this area that price didn't even enter the area. We simply reacted on these short orders that were located below, and then that was enough to cap price. And then the sentiment changed in the meantime, or we found this really nice area of bullish liquidity here, and this simply was big enough. The buying here was more aggressive than the selling up here, which is why price managed to eat away like this. And so now, I mean, there's free sailing until we get to the upside. We have this, of course, to compete with, but there's nothing really up here. We had this here, which has been tested once, so the likelihood of it holding in the future is lower than the first initial test, because ideally you want to be taking these on the first test only, because this is where the biggest reaction is going to be. Cool. All right, any more questions before we wrap things up? It's pretty long today. I don't want to ramble on any longer, and I'll get this this is of course recorded, and I'll upload it to the members section so you guys can get a hold of it. Vincenzo is saying, when you when you look for supply and demand levels, do you start from the monthly and then work your day down? Yes, I do. And I'll show you exactly what I'm doing. On the dollar index, for example, I started here on the monthly chart. I'll zoom in quite a lot. And then I want to find out what is currently driving price. And you can see here that we have this really nice area of demand. Price left it, and price has not been back. And then we have this area of supply, which is currently holding. So we have monthly supply on the longer time frame, which is currently in play. But you'll notice here that before I do anything, I want you to note that we had market structure, which was an upward sloping trend line, is now broken. So that means that we have selling going up here. We have a lot of supply up here. I mean, why do we talk about market structure failure? We talk about market structure failure because we need to be able to quantify the strength of an area of supply or demand. And how do you do that? Well, you look for areas where market structure has been violated. We had this major trend line, a low, high, that was violated by something up here. We have an area of supply, we have a test of that supply, and then price left. So this is the area of supply. It's been tested once, and the order flows at this level was so big that we didn't get a bounce at this trend line. We simply saw a decrease in buying and an increase in selling. And so we had this area of really messy demand, and this is very low odds because it's too close to the area of supply that caused the break of the trend line. But this one is still pretty nice. This is lower in the curve. We can see that we have price has to really travel pretty far in order to reach that. So you take this information with you on the smaller time frames, like the weekly, then you do the same analysis again. Okay, has market structure failed? And you can see, as a matter of fact, it has. We had like prices respecting, you can see the edge like so. So we have a downward sloping trend line, and that trend line is now broken. So we draw our area of demand, which looks like that. And that tells us that currently weekly demand is driving price because, this is the most recent area of supply or demand that has been tested. This has formed below price. This is what caused market structure to fail. So this is what's driving price. So we have a long bias on the weekly chart. Keep in mind that we are approaching opposing weekly supply up here. And so if you're going to be buying anywhere here on the hourly chart, you have to keep in mind that you're going to be dealing with some serious bearish liquidity up and around this area here. Additionally, you can see that we have a low, a high, a low, and a high. So we actually do have what appears to be it's a bit of a continuation pattern here. So before I get too excited, I'm going to have to go down to the daily chart. But you can see that price is wriggling higher nicely. We have this area of demand, which is currently in play. So price, we can expect price to wriggle higher from here. We go to the daily chart. We have this nice upward sloping trend line. We have a low, a high, a low. Price managed to move above. I just draw it in just for the sake of illustration. So we have the first low, we have a high, we have the second low, then price went above. So we can connect these like so. So we can have our trend line. Oops, that wasn't very good. But yeah, you get the picture. Trend line that goes like that where the red one is. And so we have an upward trend line or an upward trend on the daily chart. So what does that mean? Well, that means that you don't want to be selling. You only want to be buying. So you take the information with you from the larger time frames, you draw your areas of supply and demand, your trend lines, and then you base the information that you're getting from that to give you a direction of bias. So on the dollar index, the dollar you want to be buying. So everything is traded against the dollar. The dollar is king, and so you take this information with you when you look at this. What do we want to be doing here on the euro-US dollar? Do we want to be buying or selling? Well, now we know that the major orders are bullish the American dollar, so we want to be selling the euro-American dollar. And so you find nice areas of supply. This is a crappy area of supply because prices are traded like crazy around there. We look at this one here, the pound American dollar. What's this? What do you want to be doing? Well, ideally you want to be selling. Let's have a look. You can see this is moving higher, and so I mean, there's something up here that has been tested price. But if you look on this, you can see that, well, wait a minute, didn't you say 2 minutes ago that we should be bearish the pound because the dollar is high? Yes, that's what I said. But you have to keep in mind that now we're talking about currency strength. And so when we have the strength of the pound in relation to the strength of the American dollar. And this is where things become interesting, because if you're looking at a price chart, you're looking at the battle between two currencies. And so the dollar can be strong in relation to the euro, but it can be weak in relation to the British pound. And that's because the strength of the strength of the pound and the euro are different in relation to the dollar. And so currency strength is really interesting, which is why it's one of those major tools at Pipnotic that we like to use, because it gives you a lot of information about the relative strength of one currency in relation to the other. And so you can take this information, you can actually see that, wow, well, here, you know, on the longer term, yes, we are drifting lower here on the monthly chart, but on the weekly chart, we have a really nice push higher. So we have our low, our high, low, and then we have price that moved above this high here and traded. The point of origin for this price imbalance is here. And so this is where we can expect price to maybe give a bit of a reaction. I don't like these wicks here on the weekly chart. We have some really big wicks above price, which is not very interesting. So I might wait and have a look at this if price comes back down here. If we manage to move below this trend line and close, well, then I'm going to look for the area of supply here and sell that once price tests it on its way down to opposing demand, which is going to be down here, which again will reinforce what the information that we had when we came down here to the dollar index. Keep in mind we're pretty close to this weekly supply, and so the sentiment for the American dollar is likely going to change for the short to medium term once it reaches here, depending on what's going on. Okay, so Gian is saying, but from the smaller picture, it's downtrend, fractals lower and low. Yes. You know, fractals can get you into a little bit of trouble sometimes because, let me put a clean chart, doesn't matter what it is. So if we look at this, chart here, fractals are interesting because they show you, of course, what's going on, kind of like immediate price action. But trend lines are better because they enable you to, first of all, attach a trend line to the extremes like this, but also they enable you to assess if price is moving higher or lower. We have demand here, it's being tested. This was a parent, here we have a child. Why is this a child? Because this is a reaction to this one here. We have an upward sloping trend line, so we have an upward sloping so we have a bullish bias here. And so using trend lines is much better way to assess the trend than swing highs and swing lows. And if we attach that, actually I don't even have it on the fractals indicator, but it's going to mark this and this and this and this as swing highs and swing lows, but it doesn't really tell you anything, because it's just showing you kind of minor swing points. I mean, if you in contrast to a trend line, if you attach this to this, it's much more important than attaching like this to this or this to this, because these little micro swings in here aren't important to us. We want to see the major swings, and trend lines enable us to focus on the major swings. So I'd really encourage you to start, rather to embrace trend lines while at the same time using fractals. Jan is saying, when the price hits a demand zone, is that a counter trend or with the trend according to the bigger picture? Which pair you were referring to, Jan? Well, if we have, okay, if we go back to the Kiwi here, you can see that, I mean, we have a downward sloping trend line, we have a weekly sloping trend line, we have an upward sloping trend line that is broken, and so ideally if you have supply, if this area of supply overlaps with the edge of the downward sloping trend line, well, that's really nice, but it doesn't happen all that often, because in this situation, in order for price to reach this, we're going to have to break this trend line. And so when that happens, well, then you aren't allowed to trade this anymore, because you can expect price to move to the origin of this push lower, which is going to probably line up better with the weekly trend line, as you can see up here. No, selling would not be counter trend, because we have downward sloping trend line on the weekly, we have a downward sloping trend line on the daily, and on the monthly we have a market structure which has failed, which is telling us that we have a bullish consolidation. So price is potentially beginning to break down. We're seeing the first signs of price breaking down, but we can't, of course, draw a trend line until we can attach this to another swing high, which moves below this, takes out this area of demand before we can get the trend line on there. But we can see the price is having a tough time dealing with this, which is what price is reacting on. We fed into that, and then we had a huge influx of sell orders, of bearish liquidity nested in this area that is really pushing price lower. So in the last candle, it's difficult. For me, I wouldn't want to buy this. Again, I'm long. I like to look at the longer term, but of course, if you're going to be on the smaller time frames like here, there's tons of trading going on these smaller time frames. But I don't want to sit in front of the computer all the time looking at this stuff. And so, yes, buying is counter trend on the major picture, but you can also do your trend analysis on the smaller time frame. So you can go, for example, okay, I want my trend time frame to be the 4-hour chart. So what's going on the 4-hour chart? Well, we actually have an upward sloping trend line, as you can see. So we have an upward sloping trend line, so we have an uptrend on the 4-hour chart. On the 1-hour chart, what are we doing? Well, let's connect these. We have a low. Let me go like this. So we have a low, sorry, high, low, high, low, high, low. Can we use this one? No, we can't. Why? Because it didn't move above this. So we can use this one and this one. So these are the two that we can use. Oh, that wasn't very pretty. And you can see that price broke the trend line, which qualifies, but we haven't taken out any opposing demand here yet, so we can't really do anything for the time being. We can just see that price is looking like it might drift lower and rebalance this price inefficiency, which you can see just here. So the origin of this price inefficiency is just around here. So price will likely return back to this rebalance price before it continues higher, like to around here, which is probably going to be a more interesting area on the bigger time frames, and this here as well. So you can, of course, you can do your trend analysis on whatever time frame you like, but I think it makes sense to do it on the highest time frame, so you know where the major order flows, what direction they're moving in. Super good. We've been going for almost 1 hour and 45 minutes, so I think we're going to wrap it up for now. Are there any final questions before we finish up today? Hey, it's a great pleasure, Vincenzo. Am I pronouncing your name right, Vincenzo? Si. Awesome. Good. Well, bueno sera. All right, everyone, thank you so much for being here. We'll be doing this again next Thursday at the same time. So I hope to see you guys there. You guys have a super evening. Thanks so much for being here, and thanks for your patience. It's been a really long session. All right, everyone, thank you so much.